Get ready for Crude Awakenings with Brandon Cox, the CEO for Pipeline Oil and Gas.
There's special tax benefits with oil and gas investments that the IRS has structured it that way. Bart, we've talked about it a couple times on the show, but it's very critical for folks that are running out of time. Once we hit midnight, January or December 31st.
11:59, Brandon. That's when I knock off.
Yeah. Then it's game over for those missed tax benefits for 2013. So Bart, you meet with investors every single day that come in and they have questions. They're wanting to get involved. Some folks are more aware of what the benefits are than others. But why don't you explain kind of a general example with the tax benefits? And $100,000 is a great example because
it's easy for my math mind.
Yeah, with me that I tell everybody I got a C in math using a calculator. So go ahead.
You mentioned it, Brandon. No other investment category in America offers as many tax advantages as oil and gas. Let me answer your question. It's 65 to 85% of your investment is deductible immediately.
Let me just clarify. So on a $100,000 investment, potentially it could be up to $85,000 I could write off the very first year. So when I write off that $85,000, I just lowered my taxable income by $85,000. So if you're making at least $85,000 a year and you have $100,000 sitting around, what if you didn't have to pay taxes this year? How cool would that be? Because essentially that's what you would be doing, and just that's money in your pocket before a drop of oil comes out, before any gas or anything like that, before you benefit from the sale of the asset on the back end. All of that is just upfront, instant, and guess what? Here we are, end of 2013. You could see that benefit on your tax return March, April, whenever your taxes are finished up for this year. So that, for some folks, could be a nice, healthy chunk of cash